The Bitcoin weekly close is upon us, so I thought it's a good time to actually take a look at one of the most important trend lines in crypto right now, which is the 200-week simple moving average, how that's currently acting as resistance, and why any kind of market rallies need to beat this line in order for us to start getting hopeful about the market again. So in today's video, I'll be talking about that with you. My name's Lark. I make videos talking about investing. If you do like that talk, make sure to subscribe to the channel and tap on the thumbs up button. Let me know if you do like these kind of videos. Now let's go ahead and get into it. So this is the Bitcoin weekly charts here. You can see that this last candle that just closed a few hours ago, wow, the opening price and the closing price were within just a couple $100 of each other. That is a very, very tight spread for the week. Of course, you can see we had a lot of volatility during the week. But what's interesting is that even though the price came down just under $19,000 after everybody's freaking out about the CPI data, the buyers stepped in and pushed the price back up over $20,000 to close out the week. This is very, very interesting. You can also see here the week before that, our rally got right up to the 200-week simple moving average, which is the blue line on our chart here, which is where it got rejected. Now this is a new record we've got here going for Bitcoin right now, the longest time spent under the 200-week simple moving average ever in its history. We now are working on our 6th weekly candle under the 200-week simple moving average. That is some crazy, crazy stuff. Now, if we just zoom back here a little bit in history, you can see the last times we actually had this back in March of 2020, the COVID crash. We did just come blast right under it, but we recovered so quickly and started moving back up. That was a pretty nice V-shaped recovery there for Bitcoin. Even back in 2018, we came right down, but we didn't actually start closing any candles underneath it. We actually bounced off of it twice before pushing higher for our 2019 bear market rally. Now, if we go back further in history, we can see, for example, back in 2015, we did put some candles underneath this key moving average. But again, we didn't close, not like this, not like this. This is pretty crazy. This is unprecedented price action here happening for Bitcoin. And of course, now it has become our major line of resistance. We've been rejected there once, and I would not be surprised to see further rejections happen here until we get some kind of a nice bullish catalyst to help pick us up. And yeah, I know we talked about the Bitcoin 3-day MACD bullish crossover, which could help us get over this line, push us back up to, retest these key areas here around $28,000 to $30,000, which would be a fairly standard rally considering previous history of the Bitcoin 3-day MACD crossovers. But this line could be a sticky area that keeps us down for at least a couple weeks, we could say. Of course, we'll have to see how this week's candle plays out. I want to take a look at a few other indicators, though, here on the weekly, because we see some very interesting stuff that helps support the narrative that a bottom could be a lot closer, if not that having been the bottom back here at $17,500. So this is the logarithmic MACD. I think it just helps us really see where the bottoms have come in previously for the markets. And I know we're in unprecedented financial times. Bitcoin's never been through a recession like this before, et cetera, et cetera. All models, all TA may be invalidated by the overwhelming macro conditions. Keep that in mind, right? But look at this here. Right now, the logarithmic MACD is showing us right down at the exact levels that marked the bottoms of the previous bear markets. So you can see here, right? This is the bottom of the 2018 bear market. Boom. Back here, this is the bottom, 2015. Pretty interesting. We're now at that same level once again. We can see here as well on the RSI, we're actually just starting to think about, we haven't done it yet, mind you, but we're just about to look at exiting out of the oversold zone. Now, we've been oversold for Bitcoin, obviously, since the start of June. We've been in this extreme RSI zone that, again, has marked market bottoms previously. We can see that RSI previously only being this oversold. In fact, we're now, historically oversold here for Bitcoin back in December 2018, and of course back in January 2015, the bottoms of the previous two bear markets for Bitcoin. So this is a historic time right here. Now, does that mean to go out and ape all of your life savings into Bitcoin? No. But I am accumulating. I am buying Bitcoin steadily in this area. Check back in a few years to see if that was a good decision or not. My guess is that yes, it will have been a great decision to be accumulating in this historically oversold area for Bitcoin, especially with the market sentiment being so grim right now. Everybody out there saying Bitcoin's going to $3,000. And here we are. Look at the charts, right? Look at the charts, look at the indicators, look what they are currently showing here for the market. Also, have a look here at the stochastic RSI. We can see that actually ticking over into a bit of an uptrend at the moment. So if we will see that, again, this is on the weekly chart, whether we see that actually helping build some narrative around a potential relief rally coming in for Bitcoin. I think once we see the price start trading over this $22,700 zone, which is where the 200-week simple moving average is currently priced at, once we see the price action get over that, I think we can see things get real exciting real quick, because a lot of traders will then start committing into the market. Buyers will start showing back up into the market thinking, hey, look, maybe the deals are over. Maybe the bearish period is ending here for us for Bitcoin. And we'll see in that scenario, potentially the price is moving quite fast back up for a decent relief rally here. Now you got to remember that until we break out of our downtrend line, which let me just put this in here. Until we break this line, this orange line I'm putting on the chart here right now, until we break that, we are in a downtrend, all right? We might get a good relief rally. We might get an uptrend within the downtrend. But until we break this orange line, we are just ranging, right? We're ranging, and we could get up and we could get some beautiful rallies in here. But just keep in mind, until we break over this orange line, don't trust the rallies. But, of course, if you wait to buy until that orange line, well, you missed out on a lot of good price buying opportunities in this historically oversold area for Bitcoin. Historically under the 200-week simple moving average. Historically low on the RSI. Historic low levels on the MACD. I'm buying. I'm a buyer. I'm a buyer in these areas, but that's no surprise to you. Lark the Bitcoin bull, buying more Bitcoin. Anyway, that's the situation right now with Bitcoin after the weekly close, and of course what's going on with the 200-week simple moving average. By the way, if you are a cryptocurrency trader, take yourself an account over on Bybit. You can long and short Bitcoin, Ethereum, all the top stuff on their wildly popular futures markets. It's also the 7th biggest spot exchange in the cryptocurrency market, with a huge range of altcoins that you can trade on their spot markets, NFTs, all that jazz. Use the link down below in the description to get your account. You get 30% off of your trading fees, up to $4,100 in trading bonuses. Anyway, that's all from me for today. Let me know what you think about this 200-week simple moving average. You think we're going to break above it anytime soon, or is it only pain and suffering for Bitcoin for the weeks to come? Let me know down below. Thanks so much for watching today's video, and peace out till next time.